¿Qué tal? Buenas noches. Soy Itzel Orozco, especialista en sostenibilidad, cambio climático y liderazgo. Y estamos aquí en una sesión más, en una transmisión más de los conversatorios Liderazgo para la Sostenibilidad. Esta es la sesión número 14 y tengo el placer de tener a una experta en Environmental, Social and Governance, o por su acrónimo, como se le conoce, ESG. Ella es Melanie Dubin y la voy a traer a la transmisión. Melanie, welcome. Welcome to this series of weekly talks on leadership for sustainability. And I just want to say thanks for being here. Thanks for accepting to be my guest. You are a very inspiring woman and sustainability leader. And well, I just want to, for those connecting, I want to share that these sustainability talks and the entire YouTube channel that I have, please subscribe, by the way, and give a like to this video, this broadcast. These are made with the goal of bringing you guests and ideas to inspire you to create a more sustainable project, a more sustainable organization. And why do I do this? Well, I am truly and deeply inspired in protecting and regenerating nature. So if you feel anything close to this, if you're interested in regenerating and taking care of our Earth, Mother Earth, please connect and share these videos. So welcome, Melanie. So great to have you.
Great to be here. It's so nice to see you.
Yes, same. So, Melanie, I'm going to give a proper introduction of who you are and what you've been doing this last few years. Melanie is a sustainability leader with more than 10 years of experience launching sustainability programs in real estate and asset management. She engages cross-functional stakeholders to build buy-in on sustainability goals and strategies. She distills the Wild West of corporate sustainability storytelling into decision-useful data and navigates rapidly evolving ESG investing and reporting landscape, which we're going to dive into, so wait for it. She's currently an ESG specialist at Avalon Trust, an asset manager with 1.6 billion assets. And she integrates sustainability and ESG data with fundamental analysis informing investment decisions across asset classes. She also shapes corporate governance through aligning proxy voting guidelines with ESG best practice. And she recently published Avalon's first ESG magazine. So after earning her MBA in finance, Melanie served as real estate and real asset investment analyst for 20 billion endowment permanent fund, New Mexico State Investment Council, where she met target real asset allocation and led due diligence for 20 plus infrastructure, timber, energy, and farmland funds. Previously, Melanie was a lead certification reviewer at U.S. Green Building Council, where she grew the adoption of LEED building standards in public school systems across Ohio and in New Orleans. Having started her career in sustainability consulting at Davis Langdon, and now AECOM, Melanie helped project teams set and achieve green building targets and led greenhouse gas footprinting services for universities. She holds a Fundamentals of Sustainability Accounting SASBs and SASBs, I guess, credential, and is a LEED accredited professional. She holds an MBA in finance from University of New Mexico and a master's degree in strategic leadership towards sustainability from the Blekinge Institute of Technology in Sweden, which is where I met her. And she has a Bachelor of Science in Spanish from Penn State University. And she is also, nonetheless, a wife and a busy mom. She's tending her quarantine-induced patio garden. And she enjoys hikes in the mountains with her family. Melanie, thank you and welcome. This is your space.
So great to be here.
Of course, I'm happy to have you. And what is going on around the world, the corporate or business world, when it comes to ESG? What can you tell us?
Oh my, it's been
I mean, like a big, a bird's eye view.
Yeah.
Give us like a bird's eye view to start with.
That sounds good. So first, there's just so much going on and factors that are coalescing to spur interest in ESG, environment, social governance, from corporate initiatives to commit to net zero, to the EU's more stringent regulations of green products or activities, to investors getting savvier and wanting to understand climate risk, regulatory bodies incorporating a broader definition of fiduciary duty. There are standards and frameworks galore. So it is this wild west of sustainability and ESG, and folks are just asking, what do we do? What is all of this? So I think one place to start that might be useful is to draw a distinction between ESG and sustainability. Because I use those words interchangeably sometimes, and so does everybody else, but they're actually a little bit separate, and they help advance each other. So my operational definition, sustainability is more inclusive, all-encompassing, and I kind of like to think of it as the where we need to be.
Right.
When it comes to existing equitably with each other, and with the environment, obviously. And that includes all of the things you hear all over the place that are sustainability related, whether it's climate change or diversity and inclusion and everything else in that space. And ESG is really the data. It's a set of data that companies use to communicate progress towards their sustainability goals. Not everybody made that distinction, but ESG is just really data and reporting on whatever sustainability goals a company or an organization will set. And so whether that data is relevant and material, that's an issue that I'll get to. But for now, ESG is kind of the tool to communicate performance on sustainability issues. So that's kind of like the overview of how I see things.
Great, thank you. Thank you for making also that, for clarifying that the terms ESG and sustainability are different, but can be used to express one same thing. And this is important for people listening, because not all of them are sustainability practitioners, but want to incorporate sustainability into their businesses or projects. So thank you for making that clarification. So let me just follow this conversation with why has ESG taking so much relevance, and why should it?
Yeah, I think given all of those factors that have spurred the increased interest in ESG, I think the reason that it's so imperative is that it will really be an effective communication tool for shareholders and other stakeholders, and how a company is doing on all of their targets. The motivation, part of the motivation, at least that I'm seeing from a corporate standpoint, is that large ESG research firms like MSCI and Sustainalytics, they collect the data and all the information that companies report from their CSR reports and their ESG reporting and their financial reports and their online case studies and all of that. And they give companies scores on ESG performance. And so those scores matter for whether the company makes it into some benchmark or index, or whether a pension fund will invest in it. They don't matter to everybody, but for those for whom it does matter, companies want to increase their scores from a triple B to an A, or from an A to a double A or something. It's like a credit rating agency,
Right.
like your Fitch credit rating. You know, companies always want to get a higher credit rating, and so
right.
it's yeah. Sorry, go ahead.
Go ahead. Sorry.
And so when companies start effectively reporting on those material sustainability issues in a method or in a way that's understandable to those rating agencies, then their story they have a chance to get in front of their story and to communicate it in a way that they get to set the tone. If they don't report on something that one of these agencies or research firms says is relevant, that they should be reporting on, there's a void. And either, you know, analysts who don't know the industry that well might fill in some information that may or may not be correct. They might say they didn't address this, they're not being transparent. And so it's really, at this point, it's in the company's best interest to figure out what's relevant to their industry and their company in particular, and report that in a clear and consistent way.
Right. So how is ESG reporting different? Or actually, how is the goal of a company wanting to get a better rating with ESG reporting versus a financial report? Or I guess a scoring depending on the financial performance of the company?
So I might answer a slightly different question, just because something that came up as you were asking that is that you might think, after what I just said, that ESG reporting is just to check off the box for some third-party rating agency. But taking a step back, really what it is a company's opportunity to effectively and efficiently communicate progress towards goals. And, you know, ESG is specifically useful for investors. There are obviously a million ways to report on your sustainability initiatives and performance, and, you know, the GRI reports and being a PRI signatory, or the Global Compact, the UN Global Compact. All of these things are ways in which companies can communicate to stakeholders that they're committed to some aspect of sustainability. And ESG reporting kind of takes those broad reports and translates them into information that's useful for investors to make decisions. And why that's so important from an, you know, now I'm speaking on behalf of investors, and that's my day job, is that we want to figure out a way to incorporate that sustainability strategy that we see on their website and in their press releases. How do we incorporate that information into investment decisions? Are they really preparing for a changing climate? Are they preparing for changing legislation? You know, all of these things. And so ESG is like the set of metrics and data that can help us analyze a company in a more day-to-day, Monday morning kind of way. And you know, the idea is that that information is decision useful. So just like a quarterly balance sheet, and getting to your question, or an income statement or something like that, that a corporation reports or publishes every quarter, or their annual reports, ESG data should be relevant, consistent, comparable, and reliable. So we're not there yet, but there's, you know, I think that's the ideal, is that the information is as useful to investors as the financial information.
And so just to make a note for the viewers, ESG is usually an acronym, a term that's more useful to bigger corporations rather than SMEs, rather than small companies. Just to make that note, because some of the viewers, by the way, we have people connecting from Brazil. Former MS Lester says hello, but we do have people that connect that are entrepreneurs, either social or commercial entrepreneurs, and have a focus on sustainability or climate change, or just creating some social impact. But this ESG is, this whole topic is more relevant to bigger companies. And just wanted to make that note. Yeah,
and I would say one benefit of I'll get to this, I think later in our conversation perhaps, but one of the standards that I think is working really, really well, that can be a guide for operationalizing sustainability passions or commitments or goals, is the Sustainability Accounting Standards Board, or SASB. And they provide a set of standards for each sector. It's not required, there's no like certification steps or anything, but especially if you're, say, a startup and you want to go public, or you're a startup and you're seeking, phase 2 funding or something, and you know that capital will come to you more easily or more cheaply if you address some sustainability issues. The standards that SASB sets for reporting, the metrics that they identify, are the ones that are most likely to affect long-term value creation. So you can look at those metrics and just say, hey, for consumer goods, it would make sense to think about the percent of our supply chain partners that are in different jurisdictions, and what the regulatory environment how that might impact our strategy for getting products to market. So it can actually serve as a guide. It would be much harder for an SME or a startup to report in accordance with SASB standards, but it's a nice way to get some guidance to operationalize these sustainability things. And what's nice about SASB is that they've developed these standards in collaboration and in a consensus way with industry partners. And so it's not some separate entity up in a tower somewhere. They have an ongoing process for figuring out what sustainability issues will be material to each sector financially. So it's a great tool to use, even if you're not going to report in accordance with SASB standards tomorrow. Right. And I was going to say too that this is what happened also with the GRI standards, which started being exclusively for big corporations, and then it kept evolving, and they actually created the standards for SMEs. And so, and just like you were saying with the SASB's standards or reporting, this will be, I guess, with like many other things in the business world, SMEs can benefit from these practices and then adapt them to their industry, into their sizes. Not all of them will be able to, because it won't be necessarily relevant for much smaller companies, but there are some ideas that they can still pick up from this, I guess, guiding principles and standards and best practices. Absolutely. Yeah, and I think it would be great also for folks entrepreneurs in all their spare time to get engaged with organizations like GRI and SASB to help them inform how those standards and frameworks might be more useful for their kind of organization, whether it's a startup or just a tiny business, whatever it may be. Right. Great, thanks. So moving on, what is working around and about ESG? I think there's a lot that's working. Companies are getting better at figuring out what it is that investors want, even though it does seem like a Wild West. And like you go to a supermarket and pick your standards and frameworks and, you know, try to figure out like, okay, here's all the ingredients. What are we trying to bake here? But I think I will say that my favorite example of what's working is SASB. There's also and I'll get into an example of a company that's doing an awesome job, a huge company. But I think another tool that is helpful in the business transition to a low carbon economy is the task force for climate related financial disclosures. And that helps companies think through different climate scenarios, whether it's physical climate scenarios, such as, you know, thinking about increased frequency of 100-year storms that are no longer 100-year, they're like 5-year storms. Or thinking about risk around extreme weather events, like the entire power grid failing in Texas. And nobody saw that coming, except for the folks thinking about long-term systemic risk and building resilience into business models. So the task force on climate-related financial disclosures helps organizations think about different scenarios. Those are the physical things, and then the other part of it is transition risk, which is as governments start integrating a price on carbon, how does your business look? How does that impact your earnings potential or your strategy or the way that you build out your supply chain or the professional services that you offer? What will potential clients want 10 years down the road or next month if a regulation gets implemented? So the acronym for that is TCFD. It's alphabet soup out there, I'm sorry. So that's a tool that's really useful. But let me jump back to SASB, and I just want to share an example of a company that's using SASB standards that it helps investors like me analyze the sustainability performance of an organization, and it also helps the company make change and figure out where change is needed, where they can focus limited resources to have maximum sustainability impact that also is good for the bottom line. So there's a company based in the Netherlands called Unilever. You may have heard of it.
Yes, we have.
It's and I know it sounds like one of the obvious examples, but the reason I'm highlighting it is because on their sustainable living website, they break down their sustainability goals and their reporting framework, and they separate them in it. So it's really interesting to see that they've taken SASB and they say, we're going to report in line with SASB standards, and here's how we integrate SASB into our thinking about reporting, and here's our sustainability strategy informed by the data that we've collected over the years that SASB helped us prioritize. So they have big goals, and then they go into the specific metrics and KPIs. But as an analyst, it's super easy for me to go in and pull up their water usage per dollar revenue, their GHG, their the products that they're transitioning from high sugar content or high palm oil content to no palm oil or less sugar. And so it really gives me a sense of the trajectory of the business. Are they moving towards eliminating palm oil entirely from their products? Are they, how are they engaging with palm oil suppliers? How are they engaging with coffee and cocoa suppliers? Unilever is so big and they have such a huge impact that the SASB standards that they report on highlight really clearly and quickly the the sustainability issues that could impact value creation. So it helped them focus really quickly on palm oil, cocoa, greenhouse gas emissions, packaging. And these are things that are cost centers. So just from a pure economical standpoint, they don't want a hurricane in Borneo to affect, what soaps they're able to sell in the US. So it's really helped focus their efforts. And even as a sustainability leader, Unilever has improved over the past few years that I've been covering them as an analyst. And so that's an example of how figuring out really material sustainability issues informs your reporting, and how investors then think much more highly of the company for reporting transparently on these complex sustainability issues.
Right. And last year I had Michelle Dyer, our friend and colleague, she was here in this series of weekly talks, fireside chats, and she talked basically about ESG. Like you already know, she works on this topic. This is her department, and she was saying that she's noticed how it's become a much clear goal for investors to ask the companies, what are your ESG strategies, and how are you planning to move ahead with this I guess new way of behaving. So what can you share around that? Like, yeah.
I mean, it's interesting to see, ideally for me as an investor, in my dream world and where I think we need to go, if I were to paint a picture or wave a magic wand, it would be that companies report financially material sustainability data in their financial reporting. And it's as clear and consistent and easy to find and track over time or track relative to peers as financial data. And that's not easy. It's not easy for a lot of reasons. It's not easy because, number one, you have to figure out if you even can collect this data, or if you collect it in a different format, or if you collect it but can't assure it yet, get it assured, or if you don't collect it at all, or if disclosing it would violate intellectual property, or if it potentially exposes you to legal risk, because what you put in at least in the US, an SEC filing, the CFO has to sign off and say, I can confirm that this is true to the best of my knowledge. And so it's just a whole other set of data that a company is responsible for it being reasonably accurate. So there's a lot of reasons why we're not there yet, but I think with the slow but steady march towards the SEC expanding its definition of what it means to be a fiduciary, there's a chance that companies will start to have to prove, even to the SEC, that they are considering these non-financial issues in their disclosures of risk and opportunity and strategy, which they have to do anyway. So we're not there yet. And, I think there's a lot of companies that are leading, and there's also companies that are lagging because they don't want to disclose it, because number one, it's scary to be transparent. And number two, they might not want to share. Like, not every company wants to be totally sustainable. They have other motives. And so, and that's just the way it is. So unless, I think there may be there is always pushback. But
And it will happen, I would guess.
Yeah.
It will happen eventually. Like it feels frustrating for us sustainability practitioners, and especially since for those that, like us, have been in this area or working around sustainability and pushing forward to or I guess pushing to move everything faster towards sustainability. It can be quite frustrating. But it's happening, right? I think as with ESG, a lot of things are happening. And maybe, just maybe, with this pandemic, this will hopefully also has taken a different look, a different outlook, and a different feel from around the world, from every single person, not only the big corporations and those working with reporting on sustainability or social responsibility.
There's no company that's not affected in some way by big sustainability issues, climate change, equity, right. Racial justice or lack thereof,
gender equality,
gender pay parity. There's just
right.
There's big structural barriers to achieving sustainability, and sunlight, I think, is a great disinfectant, and that's kind of harsh, but I think what ESG does is help clear the air a little bit and say, okay, what's actually happening? What are companies actually doing? And then it allows stakeholders to say, is this enough or is it not enough? And in my case, I give a lot of credit to companies who maybe don't have super sustainable business models, but are starting the process of disclosure. And that's, transparency is so important. And I think,
and it will have to happen at some point for most companies, and especially those that are large companies, because of regulations and compliance and pressures from the market, pressures from the consumers. It's bound to happen. So they better jump into changing, I would say, their mental chip. Or SIM card, their mental SIM card.
I would like to do that sometimes. Can I switch out my SIM card some days?
Yeah, so that they can actually take the advantage of, or not advantage, but they can actually be with not the trends, because it's beyond the trend, right? To help them be with change and even move before change actually happens to them.
Yeah, be proactive. I mean, we don't it's in a company's best interest to come out in front of these things and be a leader. Otherwise, some other organization will get the competitive advantage, the first mover, and build the brand recognition. And so there's a risk to not doing this. And one example, another extreme obvious example on the other side is Exxon. They are the last oil and gas major to really admit publicly to the challenges of fossil fuels and climate change. And and they're only doing it because of investor pressure. And they got so much investor pressure, in fact, that activist climate investors have now replaced somebody on the board. And so they are kind of unwillingly shifting the board to address investor concerns because they were fighting against the science. And it's like, the science doesn't care if you make money or not. The science doesn't care what your strategy is. It's just going to do what it does. And so that's an organization, an extreme example of an organization really digging their heels in.
Right.
So, I see somebody, maybe that's Jen Wolfter, talking about science-based targets. And those are so important. I'm so pleased. That's another really good example of what's working. And science-based targets effectively say we need to reduce emissions 10% every year on over 2019 baseline through 2050. I mean, it's just, they've broken it down and done the math, and they help companies figure out, are their goals science-based to align with a 1.5 or a well under 2 degree climate scenario or not. And that's what the science says and the math says you got to do. And so it's like, now there's
that's super helpful to have that. I think they've done an amazing job of like jotting it down to what's the cut need to be for every year from now till 2050, or from a very from last year actually till 2050. Yes, hi Jennifer, good to see you too. We have people. We have a few people connecting from our masterclass actually. I mean our master program. Lucas from Brazil, Jennifer from, I believe she's in the US, right? Well, thanks for being here and showing your support and also sharing your comments, because we know that you've been working really hard and doing great work. So just moving on, from a systems level perspective and also from a sustainability standpoint, what do you think should happen next regarding ESG in the corporate world?
You know, I hate to be a wet blanket, but I really think regulation is important. Whether that's a price on carbon, which, you know, personally, I think is a really important step, or SEC rules on disclosure and setting of requirements for companies to disclose financially material or sustainability information. I think that the regulatory environment in this country in particular has to adapt and grow and meet the moment and step up, like in commensurate with the scale of the challenges we face. So that's, you know, from a systems, you know, just thinking big picture and what are the barriers to achieving a 1.5 degree future. We can't act on what we don't measure. And so measuring and reporting and transparency are the first step, but that's not going to happen for companies that don't have good data to share necessarily, or who are not going to excel in a low carbon economy. So I think that the regulatory environment here has to change. I think, and I'm getting a little bit political here. I think
totally
that,
fine.
yeah, you know, in this country, I just think that we really need more democratic norms to flourish. We need better access to voting, and we need to, at the same time, so increase stakeholder participation in local and regional and national politics, so that it's people that get to decide who represents us, and at the same time decrease the amount of corporate capture of policy. And that's really a roadblock, I think, in this country. And what happens in this country, specifically around financial regulation, affects the whole world, for better or worse. And so the same time that we're talking about ESG disclosure and sustainability reporting and TCFD, I think we can't have this conversation unless we also talk about voting rights, to be quite frank, and corporate capture of the regulatory process. There's so much lobbying activity here.
Well, it's all intertwined, as we've very well learned. The social fabric, the political system, and every single system we've created, the economic system, and obviously the one we live in, which is the biosphere, right? And it doesn't only go for the US, it goes like worldwide. We also need to be more, or have more democratic structures that can invite the larger public into deciding as a whole, with our own very different perspectives and ideas. Yeah, quite a challenge. So we have a couple comments from Jen. She says, my personal take is that TCFD guidance, the TCFD guidance on climate risk assessment methodology needs to become the standard expectation for publicly listed companies.
I completely agree. That's such a systemic change.
Yeah.
And Jennifer, I agree with your next comment that yes, it would put it into 10K filings, annual reports. And I have, just here, I'll show you an analysis of a company that I cover at work called Hannon Armstrong. And they publish, this is their 10K, their annual report that they just published a couple of weeks ago. And front and center in their 10K is their TCFD assessment. And so it's easy for them. They are a sustainable infrastructure company. So they finance small scale, medium scale, and large scale renewable and sustainable solutions. So like it's easy for them to talk about climate risk, and basically all the scenarios that TCFD suggests you analyze pushes their bottom line up. So they outperform the more stringent the regulations become. Yeah. So Jen, it's a really good. Yeah.
Sorry, that's exactly what Michelle said in our conversation last year. That ESG companies that integrate ESG strategies outperform all of the other companies that are not, or just like standard strategies, market strategies. So yeah, sorry, you were gonna mention something.
They do, and yeah, I mean, there's just so much data now that suggests that it's, number one, companies with strong ESG performance outperform the broader peer set of companies, and it's not. There's evidence now that it's not a bubble. It's not due to other factors like other investment factors that analysts look at, like quality factors or other stuff. It's like really idiosyncratic ESG performance that drives the outperformance relative to peers. Another thing in this Hannon Armstrong report that I think is a great example of how ESG reporting can inform your operations and help you figure out strategy. So in this Hannon Armstrong annual report, in the discussion, like the management discussion, which is where they address risk and opportunity and strategy, they break out the demographic metrics across the organization. And a lot of times companies will say, we have this broad goal of elevating people of color or women to executive leadership positions, but then they just report on diversity at like the all staff level. And so there's a huge gap. But what this firm does is report on diversity and like gender and racial and other diversity metrics at every level of the organization. And so when there's a gap, I mean, it's good just to see, and that they're brave enough to share that data, because in this country it's not required. In the UK, to a certain extent it is, but it helps highlight where, if there's really good diversity at middle management, but then at the next level up, it drops off, that's the place to focus your energy and your resources. And so that can drive your strategy around pay equity and diversity inclusion and all of that. So it's just a great example of how SASB metrics can inform actual day-to-day operations of a firm.
Yeah, it's quite interesting to me how the metrics and the frameworks for evaluating sustainability or social responsibility have evolved and have become much more detailed and even granular. And so, yeah, it's quite, I think it's quite positive. And oh, by the way, Jennifer says that she also uses the Hannah Armstrong ESG report as her favorite with clients.
Yeah, it's a good one. It's well done.
Coincidence. And so talking about reporting and maybe wrapping up, because time flies.
It does.
Talking about reporting, I was having a discussion with a colleague a couple of years ago, and we were saying, or I was saying, like, really, who does read reports, like sustainability reports, other than us? Like big companies, sustainability reports, maybe the investors, those that are very peculiar with where they're going to invest according or aligning to their values. I've seen a lot of development in the reporting. And I know that you do analyze and review a lot of reports, like you've already shared. But there's also something I've been observing, is that there's also kind of like a live reporting. Like it's becoming much more interactive with the general public, actually, not only with investors. Yeah. What can you tell us about this?
Well, I think it reflects what I've heard coined as dynamic materiality. As the world around us changes and evolves, what's relevant to a company in the moment can change. There are things that will always be relevant to a company, particular to that sector, but some external event could drive how a company reports and what they talk about and what they want to highlight. And so having a live report that you can go in and navigate and select what you want to see. And I think that's, number one, it's fun for me as an investor to go look at these beautifully designed websites. But it also allows the company to update it more regularly than just, sometimes they're just every 2 years. They're not even as frequent as a financial annual report. So I think it allows companies the ability to be flexible and nimble depending on what the world wants to see from these reports. But it also allows them to kind of adapt to changing dynamics outside of the firm. Or if they have some juicy story they want to share, it allows them to, communicate it immediately. So right. I think it's good. It can also be a vehicle for greenwashing. So it's, again, it's focusing on what's relevant and material for the company and the broader context. So a company could share some story about a Habitat for Humanity project they're working on, and that's awesome. And we need companies to do that. And if that's the focus of their ESG reporting or their CSI reporting, it might not be relevant to their core business and the impact that their core business has.
I was just going to say.
So, that's kind of like at work, the aha moment that my boss had with me when I was, just like when I first joined Avalon Trust, and we talked about kind of operational sustainability for a company versus what is their core business? How do they get money? What drives their revenue growth? Where do they invest R&D dollars? The core product and service is their biggest impact in the world. And so that's, from an impact and sustainability standpoint, that's where we want to focus our energy. And then what kind of corporate citizens are they, and how do they engage with their stakeholders? So, yeah, I think, you know, if I had another magic wand, I already used mine, but I'll use it again. It would be that sustainability reporting, like, focused really heavily on the company's core product and service, and the operational sustainability issues that are material and relevant given their core business.
Thank you for that. I was just going to, so my next question was going to be towards that particular issue, but also I wanted to add to what you were saying, that I've noticed also that even for one same company, like beyond the making a CSR or sustainability reporting tool for greenwashing, let's just say this company is committed to actually doing some efforts in becoming more sustainable and creating positive impact. But then from one report to another, you see there's actually not, don't want to say congruence, but there's not consistency, because it's evolving constantly. And then they can't measure or compare the year, the current year to previous reports, because they're continue to evolve. So this is why I was saying I've been observing that it becomes much more interactive. It's good to have the reporting online. You can actually read it, you can download it and study it, analyze it. But it's also something that it's, as we very well know, continues to evolve. So it's not really, I guess it's not a negative for the companies or from the companies that are doing or trying to do good work, but it's also a challenge.
Yeah, but I think also it's a challenge, but if you pick the right things to measure, you will generate quality data over time that will
for sure
be
but
useful.
It also has to be aligned with their core business, like you were saying earlier. It makes much more sense.
Yeah.
And it becomes much more authentic.
Yeah, authentic, useful, meaningful to everybody involved.
Right. So to wrap things up, Mel, thank you so much for being here. And my last question for you is, what do you think is necessary in order to achieve a more decisive leadership towards sustainability?
I think, you know, what's helped me has really just been figuring out and owning my superpower, if you will. Like, I've gotten good at a specific set of things, and I have a certain way of communicating, and I have, you know, a certain set of interests that I have honed in on, and really owning that and stepping into that and not trying to be something else that I'm not, has been really instrumental for me in being in this field for a while and gaining respect and credibility, which as a sustainability professional can be really hard won. And so I think, you know, just whatever, I think whatever the field is that you're in, just get really good at it and own that you're good at it. And then, you know, apply the sustainability lessons to that. And it serves as a much more authentic way of being. And I think when I've stopped trying to be something else and just sort of owned what I care about and what I'm good at, I've had so much more success, and I've been able to have a bit more of a voice and a platform. So that's when, you know, when I got comfortable with what I do, it kind of elevated the role that I have, and having a seat at an investment table and joining different volunteer boards and stuff. And it, so I think that's now how I'm able to have whatever little impact I am able to have. And the other thing I will say is, I think so much of sustainability is just engaging with the local physical community around you. And we've sort of, in this hyper-connected world, we've sort of lost touch with community building at home. At least I have. I lost touch with it for a long time. And then I'll just speak for myself. I don't want to be pedantic. So just get it, like, in my process of getting involved with my town and, you know, my university, and mentoring alumni, and getting into some community boards and sustainability efforts. It's just really connected me to the core of what I care about, and it's enabled me to grow. So that's what I think I would recommend.
Great, thank you. So you guys own what you are.
Own it.
Own it, and be bold about it, I would add. Well, thank you so much, and thanks everybody for being here. Let's stay in touch, and you, Mel, stay. Don't leave, because I want to see you before. After we end the broadcast. So stay in the platform. And you guys, next week I have an awesome guest. I have the executive director for Amnesty International Mexico. We're going to talk about feminism and gender and what we have accomplished. So, and there's other speakers if you want to learn more. Most of the talks are in Spanish, but I every now and then have an international guest like tonight with Mel. So tune in. Tuesdays, 7 p.m. usually, unless the guest is in a different latitude, which has already happened. Thank you so much, everybody, for connecting. Have a wonderful night, and I'll see you next week. Bye-bye.
Bye. Thanks, y'all.